And this
Yeah, so Aiman, why don't you tell us why you entered so many times when our rule is to only enter once and not have any re-entries on your chart?
Yeah, of course. That's actually something I messed up with.
It's Simon and Aiman here again. Today we're here to do a little bit of a trade recap. So, you know, the last video that we had thrown up on YouTube was a little bit about, you know, my background and my trading style, and went through a trade that I actually took. So we wanted to leverage this opportunity to, you know, put Aiman in the spotlight. We want to kind of review and pick apart one of his trades that he actually took today. So yeah, we're really looking forward to kind of walking you through our methodology and our way of thinking when we're trading, you know, key levels of support and resistance. So Aiman, do you want to take it away and kind of dive into the PFE trade that you took today?
Of course, Simon. Thank you. And hi, everyone. So one of the trades I've taken today was PFE. The reason I traded PFE was the fact that on the daily chart, you could see that we had 4 consecutive candles in a row. I would expect a pullback after multiple consecutive candles or after a small rally. The other thing is the weekly chart. You could see that the ATR on the weekly chart is somewhere around $2. And PFE did a move approximately from 41 all the way to 43.30. That's $2.30. And that's a move more than the ATR on the weekly chart. So I would expect it to start retracing a bit. I wouldn't be really so keen on seeing it continuing to go higher today. Finally, looking at the 60-minute chart, you could see that there is sort of a channel which is being held on PFE. The biggest mistake I've did around here, and I think Simon could see it, is entering multiple times, right? And this,
yeah, so Aiman, why don't you tell us why you entered so many times when our rule is to only enter once and not have any re-entries on your chart?
Yeah, of course. That's actually something I messed up with. So remember, when we're playing these stocks, there are 2 possible stop losses. The first stop loss is the pre-market high. The second stop loss is basically yesterday's or 2 days ago high. The pre-market high on PFE at the moment where I entered it was basically up 43.07, and I messed up. I thought that this was the pre-market high, this candle from here, and you see that this was actually an after-hours candle. And I decided to play it to the short side and using the after-hour candle as my stop. And I lost 1.3 out on this one, got some slippage. Few seconds later, I noticed that this was actually an after-hours candle. I should not use this as my stop loss. My stop loss should have been the level from 2 days ago high, or basically yesterday's high. What did I do? I immediately re-entered. I'm using this as my stop loss. It didn't even break it. I panicked a bit and exit earlier. And I think I panicked a bit because I already messed up a bit on it. And I see that, oh my God, the idea is still working. The trade didn't get me out. Why am I exiting on this particular thing? So I instantly re-entered, used the exact same stop loss, and I exited eventually my trade at 7 hours. And that's basically our target on this type of trades. Get in as close as possible to the high of the channel, use the pre-market high or yesterday's or 2 days ago high as your stop loss, and hold on to the winner. You can see that yes, I lost around 2 hours here in total, but eventually made approximately 7 hours on this one trade. And that's basically what is making us money on this type of trades. It's holding on longer. Now, this stock, by the way, is not a bad candidate to swing trade. I didn't swing trade it today. It's Friday. You don't know what's might happen on Monday. I already messed up a bit today. If you want to see more of the trades I've taken, because today I didn't trade only PFE, I traded also INTC and BSC. You could follow me on Twitter at AimanBBT. Also, make sure to follow Simon on Twitter. He shares his trades and stats every day right there. You'll see our Twitter handles written down here below. But anyway, this particular stock, it would have been a good one to swing trade because you could see that, as I told you, there is a rally. Today, we're more likely to close as a doji. On one day, we're more likely to make a pullback. So one more day at least to hold before a continuation to the upside if this thing is strong. So yeah, that's
Aiman, why don't you tell everybody a little bit actually about the 60-minute chart and the daily? Just I know you covered it kind of from the high level description, but I'm sure we're going to have some questions in the comments. In the sense that there was 2 hammer candles basically on the 60-minute chart. The daily was also a hammer candle. Tell us, you know, a little bit of your reasoning or methodology as to why, you know, you weren't just bullish from the hop just because of the hammer candles, and why you were looking for that basically a trap. And that it was going to be a bull trap, people playing those hammers long, and then you're looking for a short position. Why don't you kind of just go through that a little?
Oh, actually, that's a nice question. Thank you, Simon. First of all, remember guys that the hammer by itself is a bullish candle, but it also depends on its location. If you see this hammer at the low of the move, you would be anticipating a reversal or a pullback or a long play. If the hammer is at the high of the move, it's called the hanging man, and hanging man is the reversal candle. So it indicates a pullback and not a continuation. So if, for example, we did a few days move to the upside and then a pullback, and then you are having a hammer, definitely I'll be interested in playing it to the long side. But a few candles to the long side and then a hammer that's a hanging man, and a lot of times people are getting trapped on these type of moves. They anticipate a 3-bar play break, they play it to the long side at the break, and you see that it actually broke, but just by a few cents, and then they lose on it. Now the 60-minute chart. Yes, we had hammers on the 60-minute chart, and that's annoying. That's why I can't use the pre-market as my stop loss. Because this hammer on the 60-minute chart, it's not a hanging man. It's a move, it's a pullback, and it indicates some strength. But looking at the bigger time frames, 1, the weekly already did a move more than the ATR. 2, the daily chart, there is a hanging man. I knew that these 60 hammers, especially people who are playing smaller time frames, would be just a trap for people to feel that, okay, this thing is strong, we are having a hammer, we're having a new 60-minute high, play to the long side, and then it just dumps against them. And finally, just take a look at this channel around here. Every time it's going, it's pulling back. It's making a fake break, it's dropping down. It's coming back and it's struggling, and it's coming back and it's struggling. It needs to make that pullback before the continuation. And again, it's not that this works most of the time. We're totally transparent about our win rate. It's between the 30 and 40%. So you could say around 30 out of 100 times the setup works, 70% of the, and 70 times it fails. But what really makes you money in this type of play is the risk to reward.
Yeah, thanks for sharing the trade, Aiman. And as I said earlier, you did an awesome job, and it's awesome being green overall on PFE, especially on a Friday. Fridays tend to be difficult days. And just don't break your rules next time, and I won't either. So if anybody has some words of shame for us, feel free to drop it in the comments. Make sure you hold us accountable to following our rules and everything. But as Aiman explained, right, if he had played the 43.11 level, right, that was the correct level 2 days ago high, he still would have been in the trade, even with an earlier entry. It held that level. Psychology is obviously impacted when you're taking another re-entry after getting stopped out on the wrong level the first go round time. I made that mistake on Mara earlier this week. It's fairly easy to make these mistakes on levels, so it's really just further refining your diligence on level selection and just making sure that you can walk away with even more R's at the end of the day, right? Because if Aiman hadn't been stopped out, he would have just had the 7R winner because it followed his plan perfectly. But once again, thanks Aiman for sharing, and for everybody watching, we're looking forward to kind of sharing more content, doing more trade recaps, sharing a little bit about the pinpoint strategy that we're both trading. So feel free to drop any questions that you guys might have in the comments. Let us know kind of what content or what videos you guys want to see in the future. And we're looking forward to doing more collaborative videos.
Thank you everyone. If you like this video, please make sure to like, share, subscribe, type comment, and we'll talk to you soon again. Bye bye.
Okay, cheers guys.